Moody joins me in studio. Hello, Kate.
Good morning.
We've been talking about the EU summit now in Brussels in relation to sanctions and Crimea and Moscow, powerful figures there. But the health of the Eurozone is also under the spotlight.
Yeah, after a series of marathon discussions, EU officials on Thursday agreed on a way to unwind failing banks. This is something we've been discussing for a long time, and it's a deal that could clear the way towards a European banking union. It's meant to prevent another debt crisis and as well as bank bailouts that are funded by taxpayers. The European Parliament and Eurozone finance ministers agreed to a rescue fund with a firepower of 55 billion euros. The European Central Bank and others had previously voiced concerns that that wouldn't be enough, but 55 billion is the sum that has now been agreed to. EU officials say it's a step in the right direction.
Also on the agenda there, Kate, fighting tax evasion and banking secrecy.
Yeah, they've also been trying to do this a long time, crack down on tax evasion. They were finally able to move forward after Luxembourg dropped its reservations. The EU's president hailed the decision, saying banking secrecy is set to die. A rather dramatic explanation there. Delano de Souza has the details.
After 6 years of negotiations, European Union nations have come one step closer to ending banking secrecy. This after Luxembourg dropped its reservations on rendering its banking culture more transparent.
Tonight we made a breakthrough in the fight against tax fraud and tax evasion. More than ever, we will play a strong hand internationally to close down loopholes, to promote automatic information exchange, to bring in transparency. Banking secrecy is set to die.
Jumping on board with the rest of Europe is a dramatic shift for Luxembourg. The country relies on its banking and financial industry, which has over 3 trillion euros in assets. It had long resisted change and hoped non-EU banking nations like Switzerland and Liechtenstein would also sign up to the EU's fight against tax evasion.
We are bringing an end to banking secrecy in Europe, and we will now be in a strong position to negotiate with key international financial centres.
The legislation proposes an EU-wide automatic exchange of data on bank deposits. This would allow governments to identify and prosecute tax evaders with foreign accounts.
OK, let's take a look at the markets, Kate.
Well, Wall Street saw a bit of a spring boost, if you will, on Thursday. US stocks had slumped a little bit amid concerns about the US Federal Reserve's plans to continue paring back its stimulus measures. We're seeing a bit of a comeback on Thursday, the major indices all finishing up after some strong manufacturing data. The Dow and S&P each closing up over 0.5% there. Turning to Asia now, the Nikkei is closed this Friday as Japan marks the first day of spring with a long weekend. Asian stocks mostly following in Wall Street's positive trend this Friday. The Shanghai Composite in particular doing very, very well there, up well over 2%. Now, one thing that we have been keeping an eye on this week is the falling value of China's currency, the yuan. On Thursday, it hit a 13-month low against the dollar. This as Beijing moves to loosen its grip on its currency and the Chinese economy in general. Earlier, we spoke to our correspondent in Beijing, Paul James.
There are a couple of things. Market forces, one, are pressing down the value of the renminbi. Traders are a little bit bearish about the Chinese economy right now. Numbers to begin the year have been a little bit less than expected as far as overall economic growth is concerned. Plus, you've got issues with the basket of currencies which the Chinese yuan trades against, in that it's not a free-flowing operation compared to the rest of the currencies around the world. So when the currencies that they trade against, like the US dollars or the Japanese yen, when they go up, the Chinese currency devalues down. But there has also been some speculation and some suggestion amongst traders here that there are non-market forces at play, in particular suggestions that the People's Bank of China has been working behind the scenes with the 4 major state banks to try and push down the value of the renminbi intentionally.
And let's finish up the business with a somewhat perplexing story. The bankrupt MtGox says that it's recovered some of the Bitcoin currency that it lost.
Yeah, MtGox, you'll remember, is the now bankrupt Tokyo-based Bitcoin exchange. It collapsed last month after losing $500 million worth of that digital currency. The company said it was the victim of an online hack. Now they're saying that they've actually found some of that missing money, recovering about 200,000 of the 850,000 bitcoins that went missing. They've been uncovered in a forgotten online wallet. It was an old format, apparently, that they hadn't checked before they filed for bankruptcy. MtGox saying they made the discovery on March 7th, but only went public now after online sleuths who've been studying the firm's collapse saw some bitcoins moving through this supposedly bankrupt exchange. It's not quite clear how that will affect the firm's bankruptcy filings. The 200,000 bitcoins are worth around $117 million at today's exchange rates. That's a bit like finding some a lot of money under the couch, in between the cushions there.
Absolutely. Kate Moody, thank you very much for all of that. And of course, you're back in the next hour. We'll see you then. Now it's time to take a look at what's grabbing headlines here in France. First